Hey guys, welcome back to the channel. Welcome back to Phantom.Strategies. So today is August 16th. It's about 10:45 a.m. Eastern here in US. In this video, we will cover Ripple XRP against USD pair. This is one of the coins that we have regularly covered on this channel, and I want to bring you an updated video for Ripple, especially after the leg down we had earlier in this week. We are sitting on this support level around 44 cents, which have provided really good support in the past. And overall, like, we had a major sell-off in the market earlier in this week, and a lot of the altcoins made the newer lows for 2018, and XRP was including one of them. So right now what we're seeing is almost like a dead cat bounce. Now we have to see if this bounce have any leg, and if we can get some momentum behind this trading on the upside. Alright, so let's cover that. I want to cover some of the resistance points, some of the support point. What are some of the signals that we should be looking out for in order to see if we have this bounce going to be sustainable. Alright, so right now Ripple is trading at around 29 cents. Earlier, a couple of days ago, we saw the new low for 2018, which was around 25 cents in Ripple. At that point, it was really oversold. And when you're trying to bottom pick, when you're trying to do the oversold trading, make sure that you are not going all in, because a lot of time when you have, like, even if the indicators are showing you oversold, it might push a little bit more. It might push, like, the momentum might push the price action down further low, just like when you are on the upside. So let me just give you an example. When you're on upside, a lot of things were overbought, right? At this level, a lot of $2.8, $3, a lot of things were overbought, but the momentum trading was pushing the price action to even further high when we were in the overbought territory. Okay, so same thing, same concept applies here. When we are oversold, there might be a further leg down, which we experienced. Like, it was oversold up here, but then we saw a further push down. It happens more often than not. So what is the best way you can, if you are still interested in the fundamental of the coin, there is nothing wrong with the fundamental, but the trading, the selling is happening because of the overall market news or some other negative headline. So that's when you have to, if you are trying to get into the market, make sure that you're going with the smaller positions. So you know that, okay, let's say if it goes to 35, let's say if you're trading up here on 40, you're at 44, okay, you got into the position at 44 cents, and you're having another 10 cents, right? You have that. Remember, a couple of times I have mentioned in this channel, let's say when you're adding those positions and trying to average them out, so make sure you don't get into the you don't add on to the position until, let's say, it hit 10% or 15%. Have that number in your head that, okay, I won't add any more position until, let's say, if it hit another 10% down. Okay, so until it comes down to 37-35 cents, I won't add any more position. Now what that will do, it will give you additional cushion, and it will average your price for the 44 cents that you got into. Alright, same thing, let's say if you got into the second position at 35 cents, now make sure you have enough room that let's say if it goes down further low, that you can even average that down. Let's say if it goes down to 30 cents, then you want to get into that third phase of buying or adding the position that will give you a further more average. Okay, you can do that way, or you can always use the stop losses. Okay, so you really have to figure out what is your risk tolerance. First of all, what kind of If you're a conservative trader, if you are like more liberal trader, what is your time frame? Are you looking for a quick buck? Are you looking for longer term investment? So there are a lot of things that goes into that equation. It's not just one narrow equation. You have to like really broader the spectrum, so you can see, like, you know, from because everyone has an individual you know, risk tolerance. Mine is different than yours is different than someone else, so it's always going to be very unique. But the common theory, the common ground for everyone is, first of all, not to invest with the money that you don't have, or borrowed money. Okay, for example, don't invest with the money that you have for your car payment, all right, or money that you have for your rent or your mortgage, or money you are saving for something else, for your, like, you know, life events or something. Never ever trade with those money, because you will psychologically, you will always feel that you are, like, you know, you will try to, like, you know, make you know, really irrational decisions, because you know in your back of your head that, okay, this money is very important to me, and I know I have to make money out of that because I am, like, you know, invested with that. So psychologically, in the back of your head, you will always have that in your head, and you will make some, like, you know, wrong decision during that point. I don't want to go really into the depth of, like, why I you know, what is the, like, you know, psychological reason, but like, yeah, stay away from the money that you don't have to invest. If you don't have it, like, it's okay, like, you know, wait for it, like, you know, learn the trade, you know, trade with paper money, or like just watch the market, watch the headline, wait for the market to sell off. Like, it's okay. Like, the one thing that I can assure you, that market will always give you opportunity to make money. Okay, I'm going to say this again. Market will always give you opportunity to make money. The question is, are you going to have enough liquid cash, or, like, you know, money to invest when the opportunity comes? If you have blown out your account, then you won't. If you are stuck into some, like, bad position, then you won't. So make sure that you are taking care of your you know, your risk, you're managing your trade. So when the opportunity comes like these, when there's extreme overbought scenarios, you have you know, some money to throw into the market, and you know that, you know, there will be some bounce, and you can quickly trade that easily, like, you know, that 20-30% bounce on that, and pull that money out. Once you are, like, you know, once you're set, let's say if you are like 70-80% up on a coin, or up on a, like, a position, make sure you are 100%, you know, make sure you're taking out your initial investment. That is a, you know, very key rule that you have to apply. Don't let, you know, always take your key investment, your, like, the initial money that you invested with, always take it out of the market. So you are just playing with the house money at that point. So you're you know, you will be much happy, and you will be, you know, you will think clearly. The whole point about that is your thought process will be clear, and your, you know, what coin and what kind of, like, you know, investment you want to do, it will be much more clear. Okay, sorry about all this little bit, like, you know, dragging on it, because I want to, like, really just don't give you this, like, you know, support and resistance point, but I also want to give you how you should be trading, like, psychology of the trading, like what kind of mindset you need to have while you're trading. So I want to give you those kind of things. So it's not like just, okay, it doesn't have to be robotic. It needs to be, like, more of a, you really have to analyze it. Okay. So right now, 29 cents for Ripple. The first level of resistance that I see is gonna be around, where is this level came from? Hold on 1 minute. Okay, so yeah, that's gonna be from around 37 cents. So the first level of resistance is gonna be around 37 cents in Ripple, and then it's gonna be around 41, 42. There is some around 44, 45, but we need to see some higher volume in order to test those level. Let's say if you have picked the bottom here, okay, so make sure you put in your stop losses. You make sure you keep on adding you have pushing your stop losses in the positive direction, on the upward direction, so you are at least making some money out of this trade. So you're, let's say if you're up 5% or up 10%, then put your stop losses at like negative 3%, so you know that you can at least get like 3% out of the position, or maybe 5% out of the position. So it's not all clear. Okay, I'm gonna say it again. We are still in the down channel. This is a down channel. It's not all clear. When we are in a down channel, respect that fact. Okay, it might change, but we have to see a lot of positive signal in order to change that. So until we change that, make sure like you don't try to do like very long term. Try not to make very long-term bets. Okay, just figure out like just wait until like market gives you the clear direction. Until then, like trade with what like a small term trading. When it comes to the resistance points, maybe sell it, sell some position. If it pulls back, buy some position. So just keep stay agile, or don't try to like go in with heavy position. That's the key takeaway right now. Okay, yeah, my apologies, we went a little bit long. I just want to do like cover some basic rule and psychological aspect for trading. Hopefully like that will serve you well in your own trading. So and we will cover that topic more in detail soon. Okay. Alright, let me know if you have any question, post in the comment, and if you think this video is helping you with your trading, please do subscribe to the channel. Please do share with your friends and family, and yeah, let me know what else you would like to hear from it. Okay, talk to you soon.